Okay, and welcome back, students who are taking financial accounting. And in this series of videos, we are working on the assigned homework problems from the digital study guide for Chapter 9, the short exercises. And I'm sure you're tired of listening to this, but note, accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help you if you don't understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or telephone an instructor to get help with that understanding. And if you're working through these, you're working on the bonds and you're realizing, even in just the short exercises, that each problem, each exercise is becoming progressively difficult. I mean, 2 exercises ago it was just a bond to par, right? Then the last exercise was a bond at discount, and this exercise is going to be on the bond at premium, right? So, if you don't understand the underlying concepts, okay, you're going to be making mistakes in the application aspect of it. Honestly, the application aspect of it, can be somewhat mechanical. However, not all, it may appear that all bond problems seem to be exactly the same. But the reason why I'm stressing all of this is because, you're not going to have this same exact cookie cutter, step by step, replace the number types of problems. I mean, that's not how the real world works. It may seem like this is mechanical and all I need to do is just go and follow, along with the way I'm doing things and just change the numbers here, there, and there. But it doesn't, work that way. Okay, problems can become more and more complicated. All right, but we're still at the learning stages, trying to get the underlying concepts down. So if you don't get them, don't understand the underlying theory, go back and watch the videos. All right, so or telephone and speak with an instructor. All right, so a 912, we're looking at um, accounting for the bond at a premium. All right, so Allied issued an 8% 5-year bond with the maturity value of 50,000. Right, same as the last video, 5 years. And remember, that's going at semi-annual, right? So that's going to equal 10 periods. We're going to need that for the issuing of the payment, the interest payments, right? But now, instead of having a price of 48,000 like we did in 9-11, it has a price of $52,420, right? So that's at a premium, right? Um, because the par value is 50 and we're getting 52,420. Journalize the transactions, right? So on 1/1/2014, we're going, what are we getting? We're getting cash. So we're going to debit our cash for the 52,420, right? And we need to credit something else, right? We're going to, since it's a $50,000 maturity value bond, we're going to credit bond payable for the 50,000. And the difference between the two is a credit to the premium on the bond payable, which is $2,420. Okay, so that's the issuance. Relatively simple, same as doing the discount, except it's on it's on the flip side, right? Um, make sure you're paying attention to what's debited and what's credited. All right. So now we have a semi-annual interest and amortization of the bond premium on July 1st. Use a straight line, right? So 7/1/2014. Okay, so the amount of the interest is, that we're going to pay out is the 50,000, same as the previous exercise, times 8% times 6/12 is $2,000. So it's the same interest payment. All right. So we are going to credit our cash for the $2,000. Okay, but remember that this is a premium. All right, we have to take into consideration the premium on the bond payable. So if I have $2,420 of premium and I'm amortizing it over the 10 periods, right? That means it's $242 a period. So I'm going to debit my premium on bond payable for $242, and debits have to equal credits. And what am I doing? I am paying the interest, so I have to debit the interest expense, and the difference between those two is $17.58, and that is the entry for the payment on the bond premium. Now, notice what I did. I didn't, if you go back and you watch the 9-11 exercise, watch me working it out, okay? It seemed to be a lot more complicated, but this one here, it seemed to be very clean, clear, cut and dried. That's because I understand the theory behind it, and it just happened, a premium just happens to be just the opposite of the discount. So, the process, you can go through it step by step, all right? But make sure that you're getting your debits and your credits right, because one is a discount, one is a premium, all right? But the basic underlying, the basic process remained the same. And I'm not going to go into, I could go and make this video another 5 to 7 more minutes, like I did with the last one, but I'm not going to. Watch the two in conjunction, okay? Just realize that one is a, 911 is a discount, 912 is a premium, but by working through both of them, you'll feel that, really, it's not that difficult, and it's, relatively easy as long as you understand those underlying concepts. The underlying concepts are being somewhat applied in 911, and here in 912, I'm not presenting them, all right? But you can see how quickly I can actually do the work, all right? So with that said, I'm done with this video, and if you have any questions, definitely feel free to, watch the videos again, take my advice, and if you're not getting it, telephone and speak with an instructor.